Well, it's been a wild, topsy-turvy ride on financial markets overnight after a massive sell-off here in Australia yesterday as investors weighed the combination of rising inflation and global interest rates. It's been topsy-turvy for quite a while now too. Our business editor, Ross Greenwood, is here to explain. Ross, how did it go overnight, first of all?
Well, strap yourself in, Pete. It was a wild ride overnight, I've got to tell you. It really was. The Dow Jones index in particular really moved around the place. There were economic growth figures that came out of the US last night that are fundamentally strong. So the 2021 annual economic growth is 5.5%. Now, just to explain, 3% is generally good. 5.5% is off the charts. But the interesting part about this is, and this only adds to the conversation about rising interest rates in America, is that December quarter growth, the annual growth was 6.9%. And so, in other words, the economy in that quarter was accelerating. It wasn't easing up at all. Now, this only adds to the question about labour shortages and also supply shortages in the United States, but adds to the argument that the US Federal Reserve will raise interest rates. So at the start, when those numbers came out, the US markets took off overnight. The range of companies came out. But then there were companies, including Tesla, that really weighed on the market pretty hard. And as a result of that, you suddenly saw the markets come down big time. Now, just showing you to the year to date, the Tesla share price is down almost 30%, despite the fact that it's made $5.5 billion, way over the top record price or record profit in the past year. You can also see Intel shares down 9.5%. It reported overnight. Again, great result. But the common thing here in these two companies, Apple, we're about to see also come out in the next little while, next half hour, their results come out. It's down 12.5% this year. But the important thing about all of these companies is that they've all talked about supply shortages. And I think that's going to be one of the keys as we go forward here in Australia as well.
OK, as profit reporting season is just starting here too, Ross, is there anything to learn from the American companies reporting those profits right now?
Well, it's from those companies that you actually learn something. Here in Australia, again, the profits are going to be pretty strong. But what everybody is going to be watching is any conversation about toughness in getting supplies. In other words, not being able to get enough goods to make it. The interesting part about this is that Intel there, again, the profit was strong. The demand is off the charts, as we can see economically. But what you can also see at the same time is that Intel is pouring enormous amounts of money into building its own plants in America rather than relying on semiconductors coming in from Taiwan and China. This is about trying to not only rebuild the semiconductor industry in the United States, but it's also about overcoming those supply line difficulties. Here in Australia, what you're going to find is that in many cases, Australian companies are also caught up in this. So when companies come out and say they're having tight times getting it, doesn't matter how good the profit is, you're going to be likely seeing the share prices fall. And indeed, there's obviously a lot of concerns about that, as we saw with the big sell-off yesterday.
Yeah. Now, what about crypto, Ross? I noticed that's being pumped up by none other than Matt Damon at the moment. I read that there's now a correlation between what happens on the stock market and what happens to Bitcoin and other cryptocurrencies. Is that a good thing or not?
Well, it's interesting because when you see the sell-off in the NASDAQ, which is the tech-laden index in the United States, and you actually lay it across what's taken place with Bitcoin in particular, but most of the cryptocurrencies this year, which have obviously washed out as well, there is a correlation. And the suggestion is, of course, the two are now becoming intertwined. In some ways, there's so much money in both, and institutional money in both, that they're almost following each other. The big issue is if there is a massive wipeout in crypto at some stage in the future, whether that triggers a big stock market fall. We don't know that yet because it hasn't happened in a big way, but the suggestion is now the correlation is so close that if one of them goes bad, the other is likely to go bad at the same time. And this only shows you just how perhaps institutional and how sort of mainstream the cryptocurrency, and in particular Bitcoin, has become for many traders who now see it as a part of their holdings.
Tell you what, Ross, right across the board, you're quite right at the beginning. Strap yourself in. Put that seatbelt on, strap yourself in, and hold on, I suppose. Hey, hold on.
It's there, mate.
Yeah,
it's there.
See you, Ross. Talk to you soon.
Good on you, Pete.